Hello, and welcome once again, Mavericks. It is Joe. It's August 13th. Let's get into a Tuesday market roundup. I've got my 2 cents. You know how this works. So let's go ahead and just jump into it. Let's break down the meaningful news of the day. Let's share technical analysis on the major indexes as they've been moving all over the place. And share trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you can see that we had kind of the same extension that we've seen over the last few days of a bounce. And, you know, folks, I'm going to keep it that way. Let's get to the daily news here. The markets continue to climb today with help from the PPI. The PPI did come out lighter than expected. Understand it was at 0.1 versus 0.2. Inflation is showing some signs of slowing, at least in the production price index. We do have the CPI tomorrow. The gap up today into a consolidation and or resistance level, depending on what you're looking at, the SPY, the Qs, the diamonds. But can it hold? A lot of the times that you see a move to the downside, as we have seen recently, you're going to get a subsequent bounce. A lot of it is short covering. A lot of it is speculative buying, but a lot of it has to do, well, I should say, you can get a lot out of the volume behind it. Now, today's volume was a little bit above where we saw the last few days, but it's not a significant, well, I'm going to call it a sustainable level. Let's get into how we finished. The Dow up 1%, the S&P 1.68%, the Qs 2.43%, the Russell's 1.6%. So how I also know it's a bounce is because when you get a day as strong as we saw today, it's usually just kind of a relief rally, or I should say an exhaustive bounce. So it's very common. Oil slid 2%, something that has been moving up pretty aggressively. And gold staying flat, kind of just sitting back and seeing where we finish. Advanced decline line, 77% advancing, 19% declining. This shows that everything that was being sold into, like I say, maybe just a short cover rally. Above below the 50-day moving average, we are still to the south side of that, 52% below and 48% above. So it kind of leads me to believe that I can't look too deep into this more than just an oversold bounce. And let's take a look at it a little bit deeper. And what I'm talking about is this. This is a gap. You have to understand, folks, that that PPI number came out. It wasn't amazing. It wasn't showing that that inflation is taken care of. In fact, the CPI usually warrants more of a reaction than the PPI. I think these markets were just looking for any of a reason to maybe move a little bit higher, or some bottom fishing going on. It correlates directly with this volume. Now, the volume was higher than we've seen over the last couple of days, but when you take into consideration the last little bit when it came to that the corrective action we see in the S&P, it's right in the mid-level. So I just don't really trust too much in it. The other thing to take a look at, folks, is kind of where we finished. So you can see that we're still right at this level. We have a crossover from the 20, which would be expected, but I call it this consolidation area, right? So this is the consolidation that we saw pretty much through July, which can act, or I believe will act, as resistance. Now, I'm not going to get super bearish with this because this could actually move a little bit higher. In fact, I wouldn't be surprised if we saw a little bit of a float more towards that 50-day moving average, or even at it. But let's wait for a pivot point. I am 90% leaning toward a bear rally here, but it's too early, especially with this last little surge, this little gap to the upside here, to where I'm going to go ahead and start bearing it up, or taking a look aggressively at some bearish trades. We'll be able to see this either flip-flop with like a dark cloud cover candle, like this, or we could get an indecisive doji candle, right? Something like that. I could see a red candle that kind of negates this bear candle or bull candle that we had today. So there's a bunch of different patterns that I'm looking for to develop over the next few days. And this might not happen tomorrow. All I'm trying to say is, folks, let's keep our powder dry. Let's sit back and not throw any darts. until we really get some sort of a confirmation that this rally is indeed over. Now, if it's going to continue higher and this was the quote-unquote bottom, that's going to take a lot more than just a couple of days. Like I say, once again, folks, I'm leaning way towards the side that this is just basically an oversold bounce or more of a bear rally as we maybe move to another leg lower. So let's just jump straight into the Qs. And you can see it's a very similar pattern, a little bit more aggressive because it is a little bit more volatile, but it's in the same place. You can see resistance here set pretty much through the end of May into June. You could see a little bit of a consolidation here towards the end of July into August before it fell. And yes, we do have a bottom that actually correlates a little deeper if you guys wanted to take a look at a chart a little bit further in timeline. But what my main focus is, it's going to be this candle. It's a gap up, a big surge to the upside. I mean, take a look, folks. There's no bottom shadow on this. It was nothing but buy all day. And I don't think that the PPI itself would warrant such exuberance. And if it did, I do think it would be correlated with a whole heck of a lot more volume than that. I just think it's an excuse for maybe some shorts to cover or maybe some bottom fishing to go on. But we're right at these key levels to where we'll have to see where these markets are going to go, at least the rest of this week. And you'll see here as we move over to the heat map, it's pretty much the same. The only thing that really didn't participate was energy. So everything did come off the bottom. Anything that had been, I should say, I like to refer to it as taxed or sold into, put a little bit back on, or once again, maybe a short cover rally or speculative purchasing. So I'm really not going to get too crazy with this. Yeah, sure. It put us in a weird place where the 2050 slopes up. You can see the 50s kind of flattening out here on the chart that I showed you earlier. But you can see that we are at, I put on the 20-day moving average. It's not going to change my mind. The reason why I am at a zero for the weekly is because I'm waiting for one of those candlesticks I drew, either a dark cloud cover or a Morobozu to the downside, or some sort of a bearish engulfing or a reversal signal of some sort. And then I would be more than happy to move this to a -1, -2. But on the monthly outlook, I just can't buy into anything more than just an anemic oversold bounce off of a pretty good sell-off. So I'm just going to kind of stay where Maverick's been for the last little bit. Potential trades wise, there are some pretty interesting ones out there. Healthcare sector itself looks pretty good. I don't have it up there, but the XLV looks decent. I do like some healthcare. You can see potential sideways stuff are showing a little bit more consolidation, but we'll take a look at UNH. Sherwin-Williams and ABBV, another healthcare stock, ABBV. And then on the bear side, a lot of financials look like they're setting up some serious bear rallies. And I liked Visa up there. You could see Bank of America. I am actually going to share ConocoPhillips, basically, a energy sector. But a lot of the financial sectors look like they could be rolling over. Wells Fargo looks like it's good. American Express, there's some pretty good ones in there. So just because I just have these to share, folks, and I am absolutely sitting on my hands because I really want that pivot point to develop before I get comfortable in throwing out some bears. And I'm more than happy to do so once I see that. So let's get started with our bull. This is ABBV. This has been on, I believe, a couple of our bull watch lists over the last little while. I know that we've been watching this base break. It's been setting all sorts of ascending triangle patterns. Here's another breakout. Guess what it's doing here, folks? Another ascending triangle pattern. So I do like its continuation. It does feel a little bit more overextended. So if you guys don't really want to believe in, or don't believe in it in the shorter term, you can wait for it to consolidate or try to catch something real quick as it busts out above that resistance. Moving over to our sideways trade, I chose United Healthcare. Once again, it is in the healthcare sector. I liked the head and shoulders pattern. Let me go ahead and see if I can't draw that. Sure, head and shoulders means it could reverse. And once again, it has yet to set one. So I believe this might float a little bit higher, or it might struggle and consolidate. That's kind of why it's on my sideways pattern. But if I had to err to one side, obviously it would be to the upside because of this nice surge that it had. And it looks like it might be creating a channel. That's kind of why I had it to this sideways side. So some sort of a channel moving back and forth here could be great. I have a last slide here, folks, that talks about volatility. We absolutely need to compensate in our trading for the volatility in these markets. So if you need to go a little bit wider in your spreads or a little bit more time when it comes to some of our time frames, just make sure you give it that, because these can really correct fast, and they can bounce back and forth. It kind of gets annoying when volatility is too high, but if we can compensate for it, we can easily take care of it if you guys want to stay active. Let's go to our bear trade. This is ConocoPhillips. I thought it'd be interesting. I just couldn't ignore this beautiful pattern. I love when you get a chart that just kind of writes itself. And what's neat is you could see the 20 and the 50 came close, but they never crossed. And when this sloped down and set that higher low, just a beautiful breakdown, pivoted, and look at that. It shot up here, gapped down, traded lower, and we'll see if this can just kind of bleed down to that 104 mark. But a really cool bear setup, especially if these markets are going to do another round of selling, which I truly believe we'll see. So corrective action in the markets continue, guys. I'm just going to stay with what this is. I mean, it was a pretty good sell-off. Corey made mention yesterday that it's not the end of the world. It really isn't, but it was something that was super due. It was something that shows that there's a little bit of skittishness at the top. There was a lot of money in these markets to be taken out. When traders start to take profits, they usually take them all at once. I know that the carryover, the end trade, had a huge impact on the markets just based on what we saw. I don't think that we're going to turn around and set brand new highs here anytime soon. So it's corrective action in the markets as this surge to the upside continues. Keep your focus on chart patterns, please. Don't speculate. Don't try to get smart or cute. Adjust accordingly for the volatility. That means if you've got a trade that's outside of a comfort zone, don't take it. But if you've got a $5 spread that you think is going to hit in exactly a week and a half, chances are you might want to open that a little wider and maybe give it 2 weeks, or change into something like a diagonal to where you can make an adjustment, because you might see that target achieved in the next 2 or 3 days. You might see it hit the target in 3 or 4 days and then go exactly all the way down again in the next 5. It's just a lot of volatility in there. So that's what I mean by adjusting for it. CPI is tomorrow. The PPI came out light. CPI can come in line or light. We'll see what the markets do to react to that. That has to be seen. So keep an eye on price action regardless of what that CPI does. Jobless claims, manufacturing, retail sales, import price index, industrial production. We have a slew of stuff that can really affirm which way this economy is going. And I think that is what's going to really put these markets into some sort of sustainable trend. Check for earnings on trades. There is still a lot of earnings out there. Just make sure that you're aware of them. And if you want to go ahead and trade them, go out and find some and have at it. That's all I got today, folks. Thanks for joining me, and we'll talk to you next time. Bye, everybody.